Hey everybody, I hope everyone is doing well and had a good day today. In today's review, we're going to look at the E-mini S&P 500 5-minute chart for Friday, June 12th, 2026. Here's the daily chart, so the context going into the day. The market was in this tight bull channel for a lot of hours, and we got this trend line break. And here's the information on the daily chart we have going into the day. So there's a bull trend line. The bears broke below the bull trend line. That's good for the bears. The structure through here, we have the bear breakout here. This was June 5th. A pullback, a second leg down, an implied pullback on the daily chart. It's implied an inside bar and then a third push. So this is a micro double bottom market. Sold off to the low of June 9th, pulled back, and then sold off again to the low of yesterday, June 11th. And then yesterday's a strong bull reversal bar closing on its high. It's a bull breakout bar. So what's the expectation here as we go into the day? I say in a lot of videos that most bars are breakout bars. You look at any chart, any time frame, most of the bars are breaking out above the high or below the low of the prior bar. And the daily chart of the E-mini is the same. So the odds are the market's either going to break out above yesterday's high or break out below yesterday's low. And then the question we have to ask ourselves is, are there more traders buying or selling above the prior bar's high? And are there more traders buying or selling below the prior bar's low? So in this case, yesterday's closing near its high, we're going to see on the 5-minute chart, there was a pretty strong bull spike and channel bull trend into the close of yesterday. And that momentum carries into today. And the odds are, at a minimum, we're going to at least go one tick above yesterday's high. And then again, the question is, are there more traders buying or selling above yesterday's high? So the way I'm going to break this down is we can look at both sides of the argument. For the bulls, we have the spike and channel bull trend getting a trend line break, and we have 3 pushes down, 1 pullback, 2 implied pullback, 3, and then a pretty decent buy signal bar. So it's possible that traders buy above yesterday's high. Bears can buy above yesterday's high to take profits. The risk is that after 3 pushes down and after the trend line break, there's usually going to be a retest of the trend's extreme. So we may have to come back up here, and this evolves into a wide trading range. However, for the bears, this is a pretty tight bear channel. There's only one technical pullback here when June 9th went above June 8th. So this is a pretty tight bear channel. The bulls might need a better bottom structure. Maybe they need to trigger the stop order buy, pull back, and get a second entry long setup. Whenever I'm unsure if there's going to be more traders buying or selling above or below the prior bar's high or low, then I can pretty safely assume it's going to be some kind of a trading range day. But I do think we're going to at least get one tick above yesterday's high. Also, the average daily range going into the day is about 85 points, and that's good to know as well. So here's the 5-minute chart. We had a small gap up going into the day, and we gapped up above yesterday's high. So the gap up is a breakout above yesterday's high, and bar 1, it's a bear breakout bar. So the market rejecting the gap up. There's sellers above yesterday's high initially. Strong enough breakout that there's probably going to be a second leg down. We got, like I said, on the 5-minute chart here, pretty strong spike and channel bull trend. We had this tight bull channel, maybe a small trend line break here, but nothing too significant, no bars even touching the moving average yet. So any reversal here I'm expecting to be minor. I will say sometimes you'll see major trend reversal patterns on the open unfold over less bars than usual. So what I mean by that is, in this case, it's a bull trend, small trend line break here, higher high, double top, and then a possible bear trend, a bear reversal into a bear trend. But as I look at this chart, the odds favor a trading range more than an opposite trend. Inside bar on 2. After the strong bear breakout bar, probably sellers above 2. It looks like there's sellers at yesterday's high. And it's a trading range, so there might be buyers below 79 yesterday. And then 3, a big bear breakout bar. The bears have a micro channel, 1, 2, and 3. That's a bear breakout, and there are traders being trapped by that breakout. Traders buying for any reason, buying on the open, buying the close of bar 2 or below 2, buying at the moving average. Anybody buying here is getting trapped by bar 3, and that increases the probability that the bears get a second leg down. I talked about the major trend reversal structure, and because it's a bull trend, and now we're getting a trend line break, usually the market does not go immediately from a bull trend into a bear trend. So I'm still expecting a test of the bull trend's extreme before there's any major reversal here. A pause bar on 4. So bear breakout bar getting below the moving average, but not a very good follow through bar. Probably going to pull back soon, but there's probably sellers above bar 4. And then an inside bar 5, probably sellers above, second leg down, likely. 6, a breakout bar. It's a weak breakout bar. There's a big upper tail. Now the bulls have a 3-bar micro channel, so there might be more traders buying below bar 6, and maybe the bears get a little too short. But still, I'm expecting a second leg down after the bear micro channel down to bar 4 or 5. And then we got a bull breakout on bar 7, and that's a little bit surprising. So we got a bear micro channel followed by a bull micro channel. I said the bear breakouts on the open, bars 1 and 3, are trapping traders, and that creates resistance. But now we have a bull breakout on 7, and the entire micro channel is a breakout, and that traps traders as well. I said there's probably traders selling above 4, selling above 5, 6, a weak breakout bar. But in any case, we're getting the bull breakout on 7, and that's trapping traders. The bears are expecting a second leg down, and they're being trapped by the bull breakout. And now there's a bull breakout that's probably going to get a second leg up because it's trapping the traders who are selling. It's kind of a big down, big up situation. And it looks like it's a trading range on the open of the day. Also, I talk about this in a lot of videos. Bar 1 usually does not remain the high or the low of the day. Only about 20% of the time, bar 1 will be the high or the low of the day in general. And because of that, there's an 80% chance that it will not be the high or low of the day. So the bulls can buy here, betting that we'll at least get 1 tick above the high of bar 1. If we do get there, like I said, it's probably a trading range. Pretty big sell-off on the open, 3-bar, 4-bar micro channel, followed by a micro channel in the opposite direction. And then a follow-through bar for the bulls. Good for the bulls. Bar 8, it's a follow-through bar, but it's a smaller bar, and it's still not breaking out above yesterday's high and the high of bar 1. So we'll see, can the bulls actually break out to a new high of the day, or is this a buy vacuum test of resistance in a trade range? Big down, big up. And then the bulls failed to get a follow-through bar on bar 9, so it's a bear reversal bar testing yesterday's high. It's a double top for the bears. Low probability short below bar 9 after the micro channel, but because it looks like a trading range and because of the sell-off down to bar 4, this will probably get, the bear breakout will probably get at least an attempt at a second leg sideways to down. The problem is that the downside is probably limited because of the bull breakout, which will limit the downside because of those trapped traders, which creates support. So again, the bears selling down here for any reason, getting trapped by the bull reversal, will use the bar 6 high because it was not a very good stop order buy signal bar, big tail on the bar. It's a trading range bar. And also, the traders selling bear micro channel, pullback, selling above 4 and 5, I thought was reasonable. Selling at the moving average, also reasonable, expecting one more leg down. But instead we got the bull breakout, and that creates support in this area. So we'll use the bar 6 high as one area of support, or at least expected support. So here, the bears probably need a second reversal after the micro channel, but they'll probably get at least an attempt at a second leg down. 10, breakout to a new high of the day, but sellers above. On a smaller time frame, it's beginning to channel. We have a bull breakout, a pause, a second push, maybe another pause, and a third push. But we're starting to get overlapping bars at resistance, not ideal for buying. There might be sellers above bar 10. Second entry short, 11, reasonable stop order sell, but still against this bull micro channel. So we still might find buyers below 10, maybe 9 and 8 for one more push up. This is the first technical pullback. This is all a simple leg, no pullbacks from bars 4 to bar 10. So going sideways in a tight trading range, bar 12, inside bar, probably sellers above, maybe buyers below, but in the upper part of this overall trading range. So maybe not ideal to buy below, because if you're buying below 12, it's a third push at resistance. Bull breakout bar 13. It's a trading range bar, but it's breaking out above the high of the prior bar. But I said probably sellers above 12. It's a limit order market, probably sellers above 13 as well. 14, another bull breakout, but big tail on the bar. We can see more clearly 3 pushes. 1, pause, 2, pullback, 3. Near that resistance area. So having a hard time breaking out to a new high of the day. The bull's just barely poking above and then reversing back down, unable to get a close or consecutive closes above the bar 1 high. And then a bear breakout bar 15. 15 is a strong enough breakout bar. It's probably going to get a second leg down. The only problem is that I have that support marked, which may be a problem for the bears. Let's see if the bears can get a follow-through bar below this support. And if they can, there's probably support also down here around the low close. The trader's selling down here, also trapped by the breakout that creates support. So I'm expecting support anywhere between these lines here. 16, the bears get a follow-through bar. Now it's a breakout and follow-through, but it's about a 50% pullback of the rally. It's testing that support. Can the bears get a breakout actually below this breakout point, the bar 6 high and the moving average? 15, 16, strong enough for a second leg down, but the bulls have not had their second leg up yet. So the rally for maybe a 6 or 7 bar micro channel, that's probably going to get a second leg up as well. And 17, bulls getting their second leg. So we're testing support and we're finding buyers. 17 is a big bar. It's not ideal for buying as it's breaking out to a new high. It's a third push. Remember the gap up. So this is a push, deep pullback, second push, and a third push. So really not ideal to be buying a third push on a trading range day near what's probably resistance. It's also a big bar, bar 17, so forcing you to take on big risk if you buy the close. Bull breakout, complex, two-legged pullback, getting its second leg, but strong enough bar. 17 might need its own second leg before there's a reversal, so it might be better to wait for a second entry short or wait for the bulls to get some kind of a completed structure. The bulls get a follow-through bar on 18. It's a much smaller bar, but because it's a follow-through bar, that's good for the bulls because the market broke out to a new high and got a follow-through bar, and that confirms the breakout. So this is probably going to at least get a small second leg. There might be buyers below 18. 19, a doji bar. Low probability stop order sell below the bar. Strong enough bull breakout. 17 through 18, 19, that this first reversal attempt will probably be minor. For the bears, maybe it's 3 pushes, 1 or 1, pullback 2 or 2, pullback 3. And you have a great risk-reward ratio if you take the sell below 19 or on the close of 19. But you know it's a low probability sell. Better if there's a second entry short. And this goes sideways to up here. The micro channel continuing. For the bulls, it is 3 legs up. Like I said, 1 or 1, 2 or 2, and 3 here. Plus, I was talking about the average daily range being about 85 points. And at this point, look at that. We're at 84 points from bar 4 to bar 21. So we're at an average daily range here. And we have to ask ourselves about the daily chart context. If we can imagine the daily chart in our mind, we can also always just flip to the daily chart to get a reminder. But we know it's a tight bear channel. There's probably, as far as buying above yesterday's high, the bull bar, as good as the buy signal looks, because of that tight bear channel, the market is probably going to hesitate and go more sideways rather than go straight up. And we can see today the market is not going straight up. Pretty decent sell-off on the open here. Selling pressure 15 and 16. This looks like a broad channel, and it's more likely going to evolve into a trading range than break out into an even stronger bull trend and go for a measured move up. And then that would be about twice an average daily range. So this would all be unusual if today continues to trend up. I think more likely we're probably going to have some kind of a trading range day. Micro channel continuing here. It's important to note tails on these bars and the overlap. This is a channel on a smaller time frame. It's a breakout, a pause, a new breakout 21, but a lot of overlap 22, and another implied pullback 23. So this is on a smaller time frame, 3 pushes, followed by an inside bar, trading range bar. So on the smaller time frame, you can count 3 pushes in a trading range. The market's in breakout mode far above the moving average in a big overall third push up. Like I said, at an average daily range, the market's at about maybe 85 points here. Or at this point, these bars are much bigger, 95 point range at this point. So above an average daily range. The bulls buying here are buying momentum, and they're betting, if they're buying here, they're betting that there's going to be more to the upside and that the day's range is going to continue to grow beyond the average daily range. Bear breakout bar 25, reasonable bar to exit longs below. It's a pretty strong bear bar closing on its low again after those 3 legs up on what's probably a trading range day. I keep referring to the day structure, and I think that's important on a day like this when it looks like, again, it looks like a broad bull channel at this point. And maybe there's a trend line down here. You can draw a parallel for the channel, and you can see the market is attempting to break out above the channel line, but reversing back down. Most attempts to break out of a channel line fail, reverse within about 5 bars, and then you get a test of the trend line. So the bears have a target down here, which also overlaps with the bar 16 high. This was a bad stop order signal bar to buy, but we still got bull breakout, and that traps traders. Remember I said back here, at least I think I said, I thought 15 and 16 was a strong enough breakout to get a second leg down. Of course, the problem was that it was at support, but it was reasonable to sell above 16, expecting a second leg down, and those who sold here got trapped by the rally, and that creates support in this area. And that's support here, and it's support with this bull trend line. Follow through bar, a lot of overlap with 25 and 26. But a 3-bar micro channel is probably sell to close okay to sell and sell a pullback, because the first attempt at trend resumption for the bulls will probably fail. Or I should say the first reversal attempt of this bear breakout. Remember, it's a fairly late leg in this overall channel. So if you're buying here, you're betting on a late leg, and the upside is probably limited. If we do get above 24, there's probably sellers above 24. And the micro channel for the bears continuing, probably still sell to close, okay to sell for any reason, and expect at least a second leg down. So continuing lower, we're approaching that support, so maybe less ideal to be selling here, but there's still enough momentum down to 28 that the first reversal will probably fail. So we get that reversal bar 29. It's a pretty good bull bar, but traders will probably sell above that bar or sell the close of the bar, expecting at least one more leg down to below 29. Strong momentum for the bears. You're getting good risk reward if you buy, but it's a low probability buy. And then 30, the bears getting that second leg down to support. So now we're at support, and also you can see it's the bar 16 high and the bull trend line. So 2 areas of support in the same area. And we have like I said, 2 legs down to 30. This is all a micro channel. And because it's a micro channel, it's a bear breakout technically. There's no pullbacks. So any attempt for the bulls is probably going to be minor. And all of this selling will probably get an attempt at a second leg down as well. Market begins to hesitate. We're getting a pause bar, a trading range bar 31, bull breakout bar 32. Still on that support. I think it's reasonable to exit shorts above bar 32. And there's a swing trade to buy above 32 here. Reasonable based on the structure coming down in the context. The broad bull channel, now we're testing support once again. Remember, a channel, you trade it like a trading range. So you buy low and sell high. And down here, it's basically a trading range that is sloped. Think about what is a trading range. It's a channel that's horizontal, and a bull channel is a trading range that's sloped upward. So you have support, the lower third near the trend line, and resistance at the upper third near the trend channel line. So we're back in the buy zone, reasonable to buy back shorts, and to go long. Bull breakout bar 33. That's good for the bulls. 3-bar micro channel and a pretty big bull bar breaking this bear trend line. So that disappoints the traders selling for any reason. But pretty big tails on 33. It's probably going to pull back first and not reverse straight up from a bear micro channel into a bull micro channel. I suspect bar 33 will pull back first. Just clean up the chart a little bit. So testing support, getting a reversal. Good for the bulls. Probably will get a second leg up. So the first reversal back down will probably fail. There might be more traders buying below 34. But the market can come back down and test this support. So I think if you're buying below 34, you have to be willing to scale in lower. And I think the stop below 31 does not make sense because this is an area of support. So if you're buying here, scaling in lower, your stop might have to be wider than here, the bar 31 low. Buyers below 34 on 35, but a trading range bar getting 3 bars overlapping. We started to go sideways in a very tight range here. And it's breakout mode. You have the bear breakout down to 31, and the bears are looking for a second leg down, but then you have the trend line break, bull breakout to 33. They're expecting a second leg up, and the market, they're battling over direction here. The market's going sideways as it's in balance. The bulls have a high 2 bull flag, bull breakout, pullback, high 1, and then high 2, attempt at a second attempt at trend resumption. The bears, it's a bear breakout, low 1, pullback, maybe a low 2 short, 39. Never triggers bar 39. Also notice the blue line, that's yesterday's high. So the market, it's responding to yesterday's high as support and resistance. It was resistance back here. Sellers tried to break out, sellers again. And then through here, market broke above yesterday's high and it's finding support. It's unable to break below yesterday's high. And the bull breakout is getting a possible, maybe a high 3 on bar 40. But tight trading range, limit order market, sellers above bars, buyers below bars. Outside up 42. Again, maybe a high 3 or a high 4 at that point. And the bulls start to get their second leg up, 42 through 44. Bull micro channel, it's a second leg up near resistance on a trading range day. Not ideal for buying up here. So the bulls, they got their second leg, and now better to take profits and look to sell here. It is a micro channel, so there may have to be a second reversal, but I don't think it's great to buy here. I think it's better to buy a pullback. So 45, it's a high 1 buy, but closer to resistance. Remember, just look to the left for support and resistance. The bar 33 high is resistance. The market tried to break out of it here and failed. And you're getting a buy signal 45, but it's at least leg 3. Bigger picture, it's leg 1, pullback, leg 2, basically a spike in channel through here. And then here, bar 40, pullback, micro channel to 44, pullback. And then to buy above 45 is to bet on leg 3 near resistance on a trading range day. There might be more sellers above 45. Bull breakout bar 46, but not much has changed for what I just said. There's probably more traders selling up here. And we start to go sideways, probably sellers above 47. It's a fairly tight bull channel. Maybe there's buyers below 47, but again, I don't think it's ideal to buy here near resistance. And then the bears, they're getting a micro channel down to bar 49, second leg down likely. Sell the close, I think, is okay. It is right on the moving average, which has been acting as support through here, so not ideal. But if you sell 49, you can probably scale in and make money. The micro channel is probably going to get a second leg down. So we hesitate and bounce on the moving average here. But micro channel, first reversal, probably minor, sellers above, and then bears probably will get a second leg down through here. Ended up being a low 2 bear breakout, implied low 1, might even be a low 3 on a smaller time frame. The bears get that second leg, 54. Another micro channel, 52, 53, 54. That may get a small second leg down as well. More bars added to the bear breakout, probably sellers above 55, 56. Again, probably sellers above 56. And the sellers come in 57. 57 is a decent trendline break. Imagine on a smaller time frame through here, this is a micro channel. 52 down to 56 is a bear trend. And there's a trend line. And 57 breaks far above that trend line. And the bulls are hoping that it's a trend line break and a retest, and there's buyers below 57. And there probably are buyers below 57. For the bears, it'd be 3 legs down. 1, pullback, 2, pullback. Sorry about that. 1, pullback, 2, pullback, 3. So probably buyers below 57, but they may not come in until this support to the left. This tight trading range, yesterday's high. Bear breakout 58. It kind of reminds me of 46. So again, it's kind of you can count the legs, and it's at least 3 legs up to 46, at least through here. 1, pullback, 2, pullback, 3. Bull breakout, but in leg 3 near resistance. It's the same but opposite here. 1, pullback, 2, pullback, 3, 58. Bear breakout, but leg 3 near support. There might be more traders buying down here. Pause bar 59, and then a bull breakout bar 60. That's a reasonable bar to buy. If you're buying 60, you can buy 60 to buy back shorts. You've had 3 legs down to support. So if you're short, it's reasonable to exit because the market can test back to resistance. Bulls can buy for at least a scalp, testing these higher prices here. After 3 legs down, you expect at least a couple of legs sideways to up to correct that channel. And the bulls get immediate follow through. They get that measure move to 63. Bull micro channel, good for the bulls, but now it's back at resistance. So you're back at that area where you really don't want to be buying. It's probably better to be selling here to take profits. Selling to go short, not ideal. It's pretty decent momentum. The bears might need a second entry short, but I think it's okay to sell to take profits on longs here because of the resistance to the left. The first reversal, 64, might be buyers below. Maybe the bears again, they might need second entry short. So we trigger the sell and it fails. Bull reversal bar, but it's a reversal bar at resistance. There might be more sellers above 65. And then instead of triggering that sell, the market immediately sold off. It's a sell to close bar, 65. Now, bar 66, it's a bear breakout bar, but look where it's testing. The high of bar 59, and that's support. I don't remember if I said it, but if you watch my reviews, you've heard me say it the entire video. It goes without saying. Bull micro channel, expect a second leg up. I said buying up here was not ideal because that resistance, but there's still pretty decent price control and time control by the bulls here, 60 through 63. So the bulls will probably get a second leg up because of that, because of the trapped traders below. But because it's at resistance and a trading range day, the market may pull back first, and that's what it's doing here. 66, bear breakout. Now it's a 3-bar or 4-bar bear micro channel. So the bears will probably get a second leg down, but it's probably going to pull back first. So it's kind of we're in this area where the market's testing support. The breakout point, bar 59 high. We may find buyers here, but the upside might be limited because of the sell-off here. Probably sellers in the sell zone of 66. So 67, we find support where support is expected. The bull micro channel is getting an attempt at a second leg up, but it's right back at that resistance area. So there might be sellers above 67, not an ideal bar to buy. Plus it's an inside bar. It's really not technically a breakout bar. On a small time frame, this is a broad bear channel and it's testing the trend line. So it's a rally. It looks strong. It looks like a strong bar, but the context really not good for buying, mainly just because it's at resistance on a trading range day. And then the micro channel, trapping traders probably will get a second leg down. So we start to hesitate and the bears are trying to get that second leg down, 68, 69, and they get that second leg down to 70. Another attempt at a bottom for the bulls. For the bulls, bar 70, it's a bull breakout, high 1, high 2, bull flag. Market's in a pretty tight trading range here. There's an argument for buying above bar 70. Again, bull breakout. First reversal attempt by the bears, fails. First trend resumption attempt for the bulls, fails. The bears get a second attempt, but now the traders who sell the close 66, trapped 67. They use 70 to exit shorts, and then the market reverses back up, and the bulls have the breakout, the complex two-legged pullback, and then possibly they get a second leg. 67 might have been a pullback of the pullback rather than trend resumption for the bulls. So bull breakout, pullback down to 66, but the pullback is strong enough for its own pullback and second leg, and there's the pullback and second leg, and now this is a bigger structure. Bull breakout, two-legged pullback, maybe it gets a second leg. Doji bar, probably buyers below 70 or 71, but they may not come in until lower in the range. The bears attempting for a third leg down. There's probably buyers below, but they may not come in until below bar 70. This red line seems to be acting as support. And then 73, a bear breakout bar. That's good for the bears, but it's a breakout below a double bottom. So double bottom, 66 and 70, and a breakout below it. So it doesn't look like a wedge, but it should function like a wedge. It's 3 pushes down, 1, pullback, 2, pullback, 3, and still we're not clearing. The bears are not breaking out below all these bars to the left. So it's still possible that this is a third push and a vacuum test of support in a trading range. 73 really needs a follow-through bar. Some traders will use 73 to buy back shorts to maximize their profits, knowing it's a late leg in a trading range near support. So some bears will buy the close 73 to take profits, and some bulls will be aggressive and they'll buy the close 73, betting that instead of going for a measured move down, the market's going to reverse back into this tight trading range. So they'll buy the close 73, put a stop and measured move down, and maybe a target at the high of the bar. And that trade, the fade by the close 73 would have worked immediately just in one bar there. So again, the bears now have 3 legs down, a trend line break, and a retest. 74 might be a buy the close bar. 75, still reasonable to buy the close or buy below. Still reasonable to buy the close, buy below, as the market's going sideways near support with room to the upside in this range. Bulls are getting a sort of an endless pullback. This is a bear channel with 3 legs down, and now we're getting consecutive bull bars with trending lows. So some traders might buy 77 expecting a second leg. It's just too late in the day really for me for trading this late in the day. But as far as the price action, if we ignore time of day, I think it's reasonable to be long here. Buy the close 77, buy below, expecting a second leg. You've had the bear channel get 3 legs down to support. Now there's a micro channel. And the bulls end up getting a couple of breakout bars back to the high of the range resistance. So probably sellers here, even though it's a micro channel, better to be taking profits, probably better for selling here on 79. And the market continued a pause bar, but then a breakout bar, 81. But very tight range through here with lots of overlapping bars and a lot of trading range behavior. All right, that's going to be it for today's end of day review. Thanks everybody for watching, and for more price action fundamentals and how to trade price action, please visit the Brooks trading course. You can find a link in the description of this video. And once again, thanks everybody for watching, and I hope everybody has a good weekend.